All right, boys, let's talk about the importance of charting higher time frames and how it made me $12,000 yesterday. Okay. So, as if you guys were trading yesterday, it was July 8th. You saw that market open, pumped, dumped off a cliff, pumped again, dumped off a cliff again, and basically just whipsawed like crazy, right? Right down to this line. This little blue line right here. Okay. Now, where is this blue line coming from? Because it looks like it's coming from fucking nowhere. Oh, it's coming from the 1 hour trend. Okay, oh my god. So we don't even need to be on the 1 minute because the 1 minute looks like complete shit. It looks like just absolute utter madness and just chaos, right? So let's get off the 1 minute because it's hard to think on the 1 minute because it's going to be bouncing up and down constantly and you won't be able to tell jack shit. And you also won't be able to predict what's going to happen next. But if we look on the 1 hour time frame, because as we know, higher time frames are better indications of trends or patterns than the lower time frames. Okay, so the 5 minute trend or pattern is better than the 1 minute trend or pattern. And 15 minutes is better than the 5 minute, and 30 minutes is better than 15 minute, and 1 hour is better than that, and 4 hours is, probably as high as you want to go. The daily we don't use because we're day traders. And the 4 hour I don't really like to use because we're day traders. So 1 hour is typically the highest time frame. Sometimes I'll switch over to the 4 hour, but this was an excellent day yesterday because we did spot, actually someone in the YouTube called out that we're on the 1 hour trend line. And I had my trend line, on the 5 or 15 minute, and I was watching it. I'm like, this is not trending. This, I was like, what the fuck? I'm just not gonna trade this. I was just scalping, for little moves. But then, we realized that we've been bouncing on this 1 hour trend line the whole fucking time. And look, it's tapped this trend line once, twice, 3 times, and now we're tapping it again right now for the 4th time. And looking at the daily, each bullish candle is getting smaller. So what is this telling us by looking at the higher time frames? It's telling us that potentially in the next few hours, we're in London session right now. In the next few hours, we could be flipping into a short-term bearish market or long-term bearish market, or it's going to keep the trend and we're going to continue having a bullish day. So what else can we do with the higher time frames? Instead of looking at this, because our 1 hour trend line on the 1 minute doesn't help at all, right? Because it's massive overshoot. It'll probably blow our accounts with these 20, 30 points unless you're trading micros in appropriate size. But if you're over leveraged, you're absolutely smoked if you're using the 1 hour trend here on the 1 minute. But what we could do on the higher time frames as well is create channels. I totally forgot how to actually duplicate these lines. Been a while. Bear with me. Whatever. We'll just use the channel tool. We'll go exactly on our trend line. We want to find the highest points for the top. So it'd be right there. And now we could see that our trend is weakening from Tuesday last week to today. So exactly 1 week since this uptrend started. So now we could kind of choose a bias by looking at the higher time frames, right? We could choose that, right now, as of this minute, right now, we're still bullish. We are. We're still in an uptrend. As soon as this starts breaking out, it hasn't broken out pretty much at all. This was NFP, I believe. It hasn't broken out of the downtrend or closed a candle outside of the uptrend ever. So, if a 1 hour candle does close outside of this channel or downtrend, or if it, overshoots it, we could make short-term trades based off of that. And also, we could keep in our heads that, okay, we're still bullish. We should not be looking for shorts. Shorts might have a little bit of short-term potential, for like a scalp or something like that. But overall, it's very risky to be taking shorts because we're in a bullish trend. So we don't want to be looking for shorts. We want to be looking for the long entries. And, the dumbasses that do short it will be our liquidity for our long entries. And it's pretty much as simple as that. Just literally look at the time frames, or look at the higher time frames, specifically the 1 hour for trends. You can go down to the 30-minute as well. 30 minutes good. 15-minute is my favorite for trading, day trading. But as of right now, I mean, it seems like we might be entering some kind of consolidation phase like we did over here. I mean, if we look at this as a whole, this has just been one massive uptrend with a little bit of retracements. And this has been going on for nearly 2 months. Literally, just look at it. Like trading isn't that difficult. It's not meant to be overcomplicated. If you overcomplicate it, you're gonna run into problems. So use the higher time frames to help your psychology create a bias for the day, and then stick to that bias. If you're wrong, you're wrong. It's fine. It's okay to lose. But at least we have some real information, and we didn't just make some shit up to judge our bias off of. Okay, we have real technical analysis to base our trades off of. Now, we don't just fucking long right here because it's at the trend line and oh my god, like it's gonna hold the trend. I mean, you could. I mean, this is probably a pretty high probability trade that we're gonna continue the uptrend. But you probably don't want to just blindly do it, especially not during London when there's, look at this, every hour, barely any moves. But if this breaks during London, then we look at New York to see if it breaks back into this trend or if it starts using this uptrend as resistance to break down, consolidate, or create a new trend, and then we would chart that. And we would use the 1 hour here as well. This would have been perfect if we would have charted this day right here, this week actually. Literally just slap a trend line would look something like this probably, short term. So on Thursday, and then on Monday, we would adjust it, or we would switch to a channel. But we would want to adjust it on the higher time frames to see if the winds are changing, the tides are changing direction, and our bias needs to be switching. And this is important to do pretty much every single day. Before you take a trade, you open up your screen, you look at the higher time frames, you see what they're looking like a majority of the time. You know, little dips are irrelevant. You know, that's why I have this indicator right here, because these little dips right here where it turns purple, probably irrelevant because the next candle opened up green. And this was probably red, but it turned green because, you know, it's less bullish in time and it's still in the trend line. You know, half the battle is with yourself. So really just focusing on the longer term is going to make you less anxious, less fearful. And the greed part, you're going to have to work on, you know, on a trade by trade basis. But this should help with anxiety and fear, because we have real technical analysis that this is an uptrend for a week now. And if it breaks through here, then we do not have an uptrend anymore. Now, it could be overshoot, just like we saw over here. But if a 1 hour full body closes outside of this, and the next 1 hour doesn't blast right back into it, then very, very, very good indicator. We're going sideways, just like we did over here after we broke out of this downtrend. Went sideways, back into the uptrend. Okay? And you could do this, you know, every single day. You need to do this every single day. And you don't adjust the trend lines, you just make channels as time goes on. Just like we did over here. We would have a trend line something like this the day of, if we're watching the hourly this day. Or we probably would have had a, you know, a trend line like this that would have been broken. Which broke, came back in, overshot, and then went into the downtrend. But the day of, when this broke the uptrend, we probably start drawing our downtrend line. And because this is such a high time frame, you know, we don't want to adjust it, or we don't have to adjust it. We can just keep it. We could adjust it if we want, but a channel is better because it shows trend strength. You can see, boom, drops to the bottom of here, which is where we drew the channel. Consolidated, boom, bounced off the top of the channel, to around the middle, boom, 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 broke out the channel, consolidation, into an uptrend. So we could expect something similar to happen here, as we saw with this uptrend. Okay, so we could kind of maybe make a prediction for the next week here. Now, since this has already happened, we could do something like this. Okay. Do we see any similarities here? Tapped once. Tap the top. Middle. Top. Middle. Consolidation on the channel. Consolidation on the channel. Could we expect something like this to happen today? Very, very possible. And we're not trading for another 4 or 5 hours, so we'll have more data as the time gets closer. And we'll be able to make our daily bias based off of that, which is not just technical analysis, but also psychological, because now you have real hard evidence. And I'm going to keep repeating this because this is so important. You need to have hard evidence or something to back your idea. I cannot tell you how many times I saw a giant green candle and I'm like, oh, this is fucking a bullish ass day. I'm just going to have a full-blown bull bias. And, you know, the green candle was like one of these. And I got fucking wrecked. So, draw your trends, draw your channels, because everyone else is going to be doing it in the world. All major traders are going to be using this. They're watching, trust me, they are. And they're going to want to fucking sell. Because history tends to repeat itself. And just like we saw right here, could very, very, very well happen again for another about a 12-day consolidation period. Well, 1, 2, 3, 4, like 4 days of bearishness and about a week of consolidation before an actual breakout into an uptrend. And what do we do during these times? We scalp. We don't hold trades for very long. Even though it might look like we can, probably we really can actually. Technically, these are little trends hourly, but it is way higher risk than if we would be trading inside of a channel. So my recommendation, not financial advice of course, scalp when there's no clear channel or trend, whether it's down or up. And at a pivotal moment like this, definitely pay attention to New York Open, because New York Open will tell the story. If it fucking rockets up, New York Open, what does New York Open like to do? Manipulate and then distribute, right? So if it rockets up New York Open, I would imagine shorting it for a new bear trend, short-term bear trend. Or if it sweeps down to this pivot point right here, then I would expect it to at least bounce back onto or near this trend line and then continue sideways or go wherever it wants. But that's just the way I'm thinking. Whatever New York Open does today, or whatever happens in the next few hours, I guess, for New York Open, because we still have about 5 hours, a lot can happen. We could make a pretty good New York Open strategy just based off the 1 hour time frame. And we should always have it open. So have another monitor. I have it on my side monitor. Okay? I'm always looking at the 1 hour and the 30 minutes. And I have it on a vertical monitor. And it doesn't need to be clear as day. You don't need to look at details. You just need to look at major trends, major shifts in the markets for higher time frames. And that's it, boys.